Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect, then we will move to the order flow. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment has just rejected and broken above all structure levels. In fact, we had previous support here, which was turned resistance after this move to the downside, and the market just went straight through it. At this point, the next structure level would be the supply and resistance that we have at this high. In fact, here at this all-time high, the market started rejecting to the downside. Again, here the market tested its zone and rejected it lower. So there is good probability at this point that we will see the market continue higher to go and test once again this supply and resistance. So from a monthly perspective, we could expect more bullish price action to be developed. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how we had a series of impulses and corrections. The market has now broken, retested, and rejected previous weekly resistance turned support. So everything at the moment seems quite bullish, and we could expect more bullish price action to develop away from this zone. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, we can see a very clear impulse to the upside, followed by the start of this correction. Now, I did speak about gold a few days ago. I spoke about it when the market had created this impulse and correction. From here, I made a full breakdown explaining all the reasons for which we could expect this rejection to the upside. And in fact, that is exactly what the market gave us. Then we had the move. The market from here was starting this correction. I made another breakdown explaining all the reasons for which we could expect a bit of a correction and then more bullish continuation. And by the way, I will link in the description this previous analysis so you can go and check it out for more free education. However, at the moment, what is clear is that from a daily perspective, we have a strong impulse followed by this correction. In general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have at 0.32, 50% and 0.618 Fibonacci retracements, all lining up at this zone where I have now placed this box. And these are all quite strong reversal areas from which the market could create the rejection to the upside, essentially to go and test the monthly supply and resistance that we have previously identified, and also complete from a daily perspective this impulse correction and impulse pattern to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for gold, what we can see is that with the last reports, we were having an increase of the net positions. We went from having 64k net positions all the way up to now having 150k net positions with 12k longs added with the last report. This is making gold quite strong. So if we will have now the correction to this zone, there is good probability to see a potential rejection to the upside since institutions have been clearly adding longs and decreasing their shorts. In fact, we went from having 209k longs all the way up to 243k longs, and shorts got decreased from 150k to now 93k. So how we could be approaching this potential rejection to the upside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4-hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market, as we would have, to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you will have the possibility to gain access to my entire all-inclusive mentorship program. I really suggest that you watch this video presentation, which will show you exactly what is included. And what is included is all my courses, so risk management and trading psychology, day trading course, swing trading course, scalping course, position trading course. You also have the possibility to get access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface, and you will also have the possibility to gain access to the account funding program, in which you can get a scholarship in order to apply completely for free for a challenge for account funding. And if you scroll lower here past the testimonials, you will see that I'm also running a special promotion at the moment, in which you have a 200 euros discount on the lifetime access price of the mentorship program, so one-time payment for lifetime access to everything. And since I have partnered with the forex broker Blueberry Markets, after you joined, if you open an account with them from your student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that there is still time to join before the timer goes to zero and the offer expires and price goes back to normal. However, spots are limited, so if they get filled before the timer goes to zero, then the offer will end anyway. So I really suggest you take advantage directly from here to gain automatically access with the email and password that you will create during the checkout process. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.